Good afternoon, ladies and gentlemen. My name is Michalis. I'm one of the market analysts here at HF Markets, and I'd like to welcome everybody to a live analysis. And what a day it has been! We've seen a lot of volatility. We're going to look at all the currency performance. We're going to look at indices because it's Monday. The markets have just opened after the weekend. We're just about entering into the US trading market now, and there's been so much volatility. So, as part of today's analysis, what we're going to do is we're going to, of course, analyze the market, evaluate the market, look at signals. What are the current signals? Are signals indicating whether we should be speculating that assets are going to increase in value, that they're going to decrease? So, looking at potential signals, potential trades, potential take profits and stop losses. This is, of course, we're going to be doing throughout today's session. But as well, we of course want an educational session, people to fully understand, enjoy themselves, and are able to develop and plan for the upcoming hours. So this is definitely something that we're going to be looking at as part of today's session. Now, we've already seen that there's been a lot of volatility. Everybody has seen that. To be honest, there's been a lot of volatility throughout the market in general. Now, the reason for the volatility is largely due to what we know as purchasing managers indexes. People also know these as PMIs. Now, the European Union has released their PMI reports, including the major economies within the European Union, but also the UK has released their purchasing managers report as well. Now, the only country which has not yet released their PMI report is the United States of America, the world's largest economy, leading economy, and also the most important PMI. So we've seen a lot of volatility, but what we need to understand and need to evaluate is, yes, we've seen XYZ volatility, but what is going to happen over the upcoming hours, especially after the PMI reports for the US and also manufacturing PMI data, and how that is going to influence the US dollar, US indices, and also the Federal Reserve, because the Federal Reserve has cut already 0.5%. Previously, most economists actually believed it was going to be 0.25%. It was double that. So, depending on today's PMI, how is the market going to price in future interest rate cuts by the Federal Reserve? Because I can already tell you, in regards to the ECB, of course, economists and investors, whereas previously they were looking at the ECB taking a pause for maybe a month, maybe 2 months, because they decided to go quite large with their first interest rate cut, larger than the Bank of England, larger than the Federal Reserve. Whereas now we've seen such poor data. I'm going to show you the data that we've actually had from the European Union. So if you type in HFM and type in calendar, for example, like so, it will take you, of course, to our very own calendar. Now, I'm going to show you what we have seen released so far today. So I'm going to go to my filters. I'm going to make sure nothing has been included as part of the filters. We're going to add the US. We're also going to add the UK as well. We're going to add the Eurozone, Germany, and also France as well. So France is, can anybody see France? Bear with me. Let's see if we can see. Okay. No, France isn't here. So let's look at Germany. Let's look at the European Union. Let's look at the UK as well. Now, this is in regards to the UK and the European Union, because, of course, the US PMI is not going to be released for at least another 10 minutes. Now, look at the European data. Look at the PMI here, ladies and gentlemen. It was expected to come in at 52.4, came in at 50. If we look at the PMI data here again, just so everybody's aware, when it comes to purchasing managers indexes, if we're at the level of 50 and above, it is indicating that there's a strong possibility that the economy is going to grow within the upcoming months. If it's below 50, it's actually indicating that the the economy will shrink. This is known as economic contraction. And of course, it's negative for assets which are related to that region. And you can see here, both of the major PMI data was lower than 50. And not only was it lower than 50, but it was lower than previous expectations. Now, if you look at the UK data, it wasn't lower than 50, but still it was lower than the previous month, and it was again lower than expectations. So this is why if we look at the US dollar index, the US dollar index generally speaking performed extremely well, just because the UK data and also the European Union had the terrible announcement early on today. Now, the volatility we're about to see is going to depend on what is going to be released by the US. Now, at first, here we're looking at the euro against the US dollar. If we look at the euro against the US dollar, we can see here it originally dropped by 0.68%. Now, some people may say, yes, it dropped by 0.68%, but it's retraced upwards. So why was that any use for me? But if you actually switch over to, for example, I won't go to a 5-minute time frame. I'll go to a 15-minute time frame or even a 30-minute time frame, because of course everybody knows on a 1 minute and a 5 minute it will become oversold. But even if you're looking at intraday signals, intraday time frames like these, you can see that when it declined, at first it declined by a lot before we got an oversold signal. So the price and the market opened here. It continued to decline approximately down to here. So that's 0.51%. 0.51% is a massive movement on the currency market, because don't forget we have very high leverage here available on currencies. So, ladies and gentlemen, to be honest, yes, the price retraced, but we have to also take into consideration that there was a lot of price movements before the price retraced. It was more than enough price movement for short-term traders, and also everybody should have known that the price was going to retrace upwards. Now, why is that? If you look at the previous low, ladies and gentlemen, the previous low was here. So the price, if you look here, it declined almost 0.5% below the previous low. So that's the first indication, of course, that it was going to retrace back upwards. Because don't forget, when you get a very, very large price movement in a very short period of time, then there is a very strong possibility that the price can retrace. Now, that's not there for people to trade and speculate and try and fight the trend. Of course, if you're fighting the trend, there's disadvantages to that, but it's about ensuring you are entering with the right timing to take advantage of the trend. And also, ladies and gentlemen, you can see here on the RSI, this is an RSI on an 18 period. You can see here very clearly it was below 25. So we had a very, very clear indication the price was oversold and it was going to retrace. Now, what I will say now, ladies and gentlemen, is the US session has opened. So, of course, as we all know, when we switch sessions, there is a stronger possibility that the price may either gain momentum or see a completely different type of price movement. So we need to also keep that in mind as well. Now, the market hasn't necessarily seen a different swing, new volatility into the market now that the US session has been open for 9 minutes. But, ladies and gentlemen, keep in mind, people are holding back for 15 minutes. The market opened 9 minutes ago. They're holding back for another 6 minutes until the PMI for the US is released. If the PMI for the US, ladies and gentlemen, is stronger than expected, then of course we can take that into consideration, because that may have a positive effect on the US dollar and potentially also on the stock market. Because if the globe in general sees poor economic data everywhere, then what actually starts to happen is the market has a lower risk appetite. They're scared to invest. Demand declines because they're scared of a recession and a hard landing. And what actually happens is that it could negatively affect the stock market. So positive PMI data is potentially positive for the US market. And it also could be for the US dollar as well. Now, the only thing I will say, ladies and gentlemen, is if people want to speculate for whatever reason, like the US dollar will continue to decline because, yes, we had the 50 basis point rate cut. Here we can see the volatility over the past 4 hours has been against the US dollar. If people do want to speculate against the US dollar, then ideally you don't want to speculate that one currency is increasing in value against and not sorry one currency is decreasing in value against another currency which is also decreasing in value. So I'll put it in a very simple way. If you want to speculate that the US dollar is going to decline, do you want to do so against a currency which is poor performing, just like the US dollar at the moment? Or would you rather do so against a currency which is the strongest performing currency of the moment? So I can see a lot of people asking questions now. A lot of people asking questions. A lot of people are saying to me, what is the best performing currency? Because a lot of people, actually, I'm talking about the US dollar, but a lot of people here on the chat I can see is saying, what's the best performing currency so I can speculate the euro against it? So a lot of people want to speculate that the euro is going to decline, but they want to do so against the right currency. Ladies and gentlemen, the best performing currency of the day is the Australian dollar, the New Zealand dollar, and the best performing currency of the year so far is by far the British pound. So if we want to speculate that the euro is going to decline because French PMI was poor, German PMI was poor, European PMI was poor, and also we had a massive interest rate cut by the ECB. Most economists and traders now believe the ECB again will have to cut, and if they want to speculate that the euro will decline, then there is benefits to doing so against a currency which is performing well. So I've mentioned some currencies already. Let's compare this price movement. Yes, the US dollar saw big price increase against the euro. You can see the price dropping all the way down to here. So that's the US dollar increasing in value. But you can see it's retraced half the way, slightly above half the way. Now, if we look at the euro against the Australian dollar, look at this, ladies and gentlemen. No retracement. There's no retracement here. If we look at the second best performing currency of the day, if we look at the euro against not the Australian dollar, but the New Zealand dollar, let's find it here. That's even better performing. Look at this compared to the euro against the US dollar. So there's two types of traders a lot of the time. There is traders which are looking to speculate and take advantage of the price movement of the trend. They want clear retracements, larger impulse waves, so it's easier for them to analyze and easier for them to profit based on these signals. Some people, though, they prefer to trade the reverting market, such as mean reversion, for example. Now, people looking at mean reversion, yes, fair enough, they may be more beneficial looking at the Euro-USD, the euro against the Japanese yen, for example. But here you can see very clear, strong price movement. For example, if we're looking at the euro against the New Zealand dollar, it's currently 0.74% lower. Now, the only thing I will say, ladies and gentlemen, is because it's 0.74% lower, I will be really cautious about speculating that that's going to continue to decline. Why? Because there's been such a massive price movement, ladies and gentlemen. The price movement has been massive. So slightly be cautious about that. You can, of course, if we've got scalpers here, if we're looking for individuals looking to enter and 0.05, 0.0678, for example, very short term, of course, they can take advantage of that. You can see here for those individuals, I've got some people here asking for some analysis. For example, if somebody says the euro against Japanese yen, let's actually go to the euro against Japanese yen. Something interesting about the euro against the Japanese yen. I'll go on to a 2 hour time frame. Something very interesting about the euro against Japanese yen is that the Japanese yen is actually the only currency with a central bank which is predicted not to cut interest rates. Okay, the European Union, the ECB, the Bank of England, also the Federal Reserve are all definitely going to cut interest rates, according to economists. The Bank of Japan is not going to cut interest rates. Now, we've just had an announcement. So let's go to our calendar and we'll come back to this. Okay, we of course not yet, we haven't looked yet at, for example, um, we haven't looked at signals, we haven't looked at potentially where we can trade. So let's look at today's announcement, okay? Now, if you look at the manufacturing PMI for the US, that came in significantly lower than expected as well. Significantly lower than expected. So actually now maybe there's an advantage of looking at the US dollar against the Australian dollar, for example. Why? Because the New Zealand, the US dollar and the US now have seen that also their manufacturing PMI was lower than expected. Previously, it was at 47.9, it's dropped to 47, was expected to actually rise. It didn't rise. So that's a poor announcement for the US. Also, in addition to this, the only positive thing, ladies and gentlemen, is that here the PMI, the services PMI, is still declined. You can see it was at 55.7, dropped to 55.4. It's slightly higher than expectations, but to be honest, that's only slightly higher. And actually, if I look at my report here, I can actually see that some economists actually did state that it will come in at 55.4. So to be honest, that's almost in line with expectations. So let's go to, for example, the US dollar against the New Zealand dollar, or we can do the Australian dollar against the US dollar here, for example. So we can see we've started to see more volatility. Now, if we're looking at the New Zealand dollar against the Australian dollar here, let's zoom out like so. Now we can see we're above the previous high, we're above the resistance point here. Of course, we have to take into consideration that we're changing the pricing of the assets now. We're changing the pricing because we're seeing interest rate cuts. It's a higher interest rate cut than we were previously expected. So of course the market's going to price that in. We're above the previous resistance level, but very clearly the latest crossover here, ladies and gentlemen, is a bullish crossover. It is an upward crossover. We trade them currently on the RSI at 59. So we trade them between the 50 and the 75. So currently we have indications here that buyers are controlling the market. In addition to this, we also need to take into consideration that we're above our trend line. Here is a 75 exponential moving average. We're above the trend line and we're above the price sentiment line. So these are indications, ladies and gentlemen, that buyers are controlling the market. We have to, of course, take that into consideration. Now, somebody says here, are we expecting any economic data over the next few days related to the Australian dollar? Yes, tomorrow we will have, keep in mind though, it's very early tomorrow. We will have the Reserve Bank of Australia. They will confirm their interest rate decision. They are expected to keep their interest rates unchanged. If they do keep it unchanged, it can be positive, of course, for the Australian dollar because everybody else is cutting interest rates. Also, we can look at the Australian inflation rate, which is going to come out on Wednesday. Australian inflation is expected to drop from 3.5% to 2.8%. If it comes in anything higher than 2.8%, again, that's something potentially positive for the Australian dollar as well. So people that are going to follow these indications that buyers will continue to control the market, then of course, ideally they want no interest rate cuts tomorrow. Also, ideally, a hawkish governor of the Reserve Bank of Australia, but also higher inflation on Wednesday. But I'm going to switch over to a smaller time frame just for a moment. So if we switch over to a 5 minute time frame and I go to the Australian dollar against the New Zealand dollar, you can see after the announcement we did go higher. It retraced after that, and now we're looking at where potentially we can start to speculate again upward price movement. Now, the first thing I want people to take into consideration is, for example, myself, I've been a financial advisor for many, many years. I'm actually licensed in the UK and also in the European Union. I've worked with trading floors, I've worked with large institutions and companies, and you actually will find that large companies, they put their orders where the mass will put their stop loss. Okay, so me myself, I'm always taking into consideration where are people putting their stop losses. And to be honest, most people will put their stop loss here at this level. A lot of people will also put their stop loss here at this level as well. So as it drops to this level, ladies and gentlemen, especially if it's going to drop to this level down here, we have to take into consideration maybe that's the retracement, the correction before the market re-enters the market. So these are very key points. Now, I'm not talking about support levels. To be honest, myself, I do look at support levels because I try to think about how the psychology of traders and investors changes when it reaches certain prices. But support levels, it's not like a work of art. It's not like, children that have a drawing book and they have to stay within the lines. The market doesn't work like that. So people that think of support levels like that, it really doesn't work like that. Nobody in the real market will say it's at the support level, so I'm not going to speculate the decline anymore. Um, whereas looking at where people potentially are going to have their stop losses, that is something where large institutions try and take advantage of. It's about thinking to yourself, where are the large players going to drive the market and how can I take advantage of that? So if the market is going to decline, these two areas, especially the area down here, is very key. Now, there is also other indications saying to us that is key. Number one is just below the support level here. It's not at the support level, slightly lower. Also, it is more or less, if we see a decline, it is more or less at the 100 period moving average. We, of course, can drop this slightly lower to an average between the support level and also the average period, the 100 average period. So that's something we can take into consideration. If it's going to drop to there, we're going to look at potentially retracement before the market continues to move upwards, unless something changes in terms of the market. For example, if tomorrow the Reserve Bank of Australia is going to cut interest rates unexpectedly, of course you're going to ignore those levels. So that's one thing for us to take into consideration. The other thing for us to take into consideration as well, of course, is if we're going to increase above this level here. This is the price rejection level. It's also the resistant level. It's also known as the breakout level. If the price increases above this level, then you can also deem that as speculating upward price movement. Now, if people are going to trade here and then a retracement does form, then of course they can take into consideration the other entry point we previously were talking about. Now, let's say, ladies and gentlemen, that in fact the US dollar is going to increase in value. People are going to take advantage of the discounted price of the US dollar, or maybe, like I said, the Australian data is poor and it doesn't support the Australian dollar. Where can we speculate a change of trend? There's different things we can look at. Number one, we can look at the price dropping below this level here, which is our trend line. Another thing is we can look at bearish crossovers. So here I've got an 8 period exponential moving average and an 18 period simple moving averages. As it crosses downwards, we can speculate downward price movement. So, for example, the latest indication was this upward price movement. So, if we look at this blue line here, ladies and gentlemen, you can see the yellow crosses above the green here very, very clearly. Now, it crosses above this level, and it's also above our trend line. So, we have no conflicting signals there. We have very clear signals. So here we can see we had a very clear signal. And ladies and gentlemen, look what type of price movement we've had since then. We had upward price movement of 0.18%, and that's 0.18% just so far. Of course, yes, a lot of people, 0.18%, that's more than that price movement for them. But nonetheless, that's something for us to take into consideration. Now, let's look at some other assets as well, because of course, I don't want to just look at the US dollar. I also want to look at the US stock market. I also want to look at gold as well. So here, ladies and gentlemen, we're looking at gold. Upward price movement, very strong upward price movement for gold. To be honest, we've already had two signals in regards to this. I spoke about these signals last week actually. There was two signals that we can look at. A lot of people look at the breakout like here. I was slightly cautious about the breakout. I wasn't against the breakout, but what I did say is why miss so much price movement? Whereas we only just need enough volatility, enough momentum to indicate the upward price movement is again in swing. So rather than trade all the way up here, I actually said, we one method is to draw the Fibonacci retracement levels between the high here and the low here, and the breakout level for it to be here at the 65 level. So this is also something you could have taken into consideration. So there was an entry level here, and there was an entry level here as well, an earlier and a later entry. So these are two things you could have taken into consideration in regards to gold. Now, some people may say, why is gold increasing in value? Gold's increasing in value because the global economic indicators, the PMI, the Purchasing Managers Index, which is very key, creates a lot of volatility. For the very first time in quite a while, was terrible across the board. French PMIs, European PMIs, German PMIs, UK PMI, US PMI, they're all underachieved. And more than half of them, it's not only that they're underachieved, but they actually indicated that the economy was going to slow down. Now, what does that do? That means people want something safe. People reduce their risk appetite within the market. And that's, of course, understandable. So, what do they turn to? Potentially, they could turn to the safe haven asset. Gold, of course, is a safe haven asset. Ladies and gentlemen, when we look at gold, we're currently trading at 68 on the RSI. It's between 50 and 75. Clear indication buyers are controlling the market. We're very far above both moving averages. Again, clear indications there. If we switch over to a 1 minute time frame, we can see we're on the bullish side of the Bollinger Band. We're trading above the 50 exponential moving average. If we're looking at the MACD has no divergence, very clear convergence here. Stochastic oscillator again very high, and on a 1 minute time frame, again the RSI is very high. So we have very clear indications of bullish price movement for the RS for gold as well. The only thing I will say in regards to gold is if it's going to decline and it's going to decline back to this level here, number one, it's a support level. Number two, a lot of buyers. I'm going to put their stop loss either here or either down here, ladies and gentlemen. So those are two key areas we have to take into consideration. So that's in regards to gold. So we've looked at for the moment based on the indications, Bollinger Bands, moving averages, MACD, stochastic oscillators, they're indicating upward price movement, though we have to be cautious about volatility. If we are going to see volatility against us, like I said, this level here is very key. This level here is very key. Potentially, that is maybe where buyers are going to re enter the market to try and take advantage of those stop losses, because what they do is they increase demand and they increase buy orders, and at the same time they're taking advantage of the volatility which is going to be created by all those stop losses and all those people exiting the market, and it just reshoots back up, ladies and gentlemen, with a lot of volatility, a lot of volatility. So again, something for us to take into consideration. If we actually zoom out, for example, you can see the exact same thing here. That's the support level. We're not saying the support level. We, like I said, just slightly below the support level. So, for example, we may have set here, for example, because of course we don't know the price is going to decline down to here. So just put your hand over that so you can't see it. Um, and you can see we would have put the moving our line here. So as it declined to there, we know, take into consideration, are we about to get a swing upwards? Now, some people may say, it's risky to start trading uh, before the price movement has happened. So there's two things you can do. Number one, you can open a very, very, very small trade there if you wish, if you believe the market is indeed going to trade back in favor of the trend there. Because keep in mind, we're not saying the trend is going to change there. We're just saying the trend will gain momentum again there. So keep that in mind. We're not trading against the trend if we're buying here. Either way, we could have very simply opened a very, very small trade potentially, waited for the retracement after an impulse wave forms, and then open a second, maybe larger trade if you wish, on the breakout. So we would have traded here, would have been a great trade, and then a second trade here as the price broke onto a high, because there we have indication that momentum is indeed being gained. So that's something for us to take into consideration. Again, we're going to look into that if we're going to decline to here, or if we're going to decline back to our previous levels here, where a lot of people are going to be putting their stop losses. So that's again something for us to take into consideration here and here, ladies and gentlemen. And like I said, if it's going to fall and then retrace upwards here and then retrace again, then we can draw a breakout, we can draw Fibonacci retracement levels potentially as well. So that's in regards to gold. And I've also, like I said, as promised, I confirmed exactly why gold is seeing stronger price movement again today. Of course, we're going to take into consideration we're about to see more interest rate cuts, especially from the European Union. We will see from the Bank of England as well. But also, in addition to this, people want to take advantage of that safe haven asset because economic data is looking very poor. Somebody here 5 minutes ago, they said if we can look at the euro against the USD. Very quickly, I'll look at the Euro-USD. This morning it was at the neutral level, but I'll re-look at it now. Bear with me. Let's search it. Euro-USD, because I've got a lot of assets here. There we go, Euro-USD. So here, ladies and gentlemen, like I said, we're very close, more or less, to being at neutral. Why are we at neutral? Well, number one, because we're trading at the trend line. So it's not very clearly above the trend line. So there's nothing really there, ladies and gentlemen, to say buyers are in full control. We are trading above the sentiment line here. So that is definitely an indication that buyers are controlling. But the RSI is below. The RSI here is at 46. So 46 is a poor indication. If we're looking at the green line here, is a positive indication. If we're looking at the red line here, it's a neutral indication. So we have no indication there, ladies and gentlemen. We are at neutral. So what can we take into consideration? Potentially, we can look at the price forming a larger price range, maybe somewhere between here and here, ladies and gentlemen, just for it bumping its way up and down. So that's one thing we can take into consideration. Another thing we could look at is very simply we can switch over to a smaller time frame like so, and we can look at, for example, if we're going to cross above here, ladies and gentlemen, or what we can do is we can draw the Fibonacci retracements like so. We've got the 65 here. If it's going to cross above here, we can speculate a price increase. If it's going to drop below here, we can speculate a price decrease. Because we're on a neutral though, signal on the 2 hour, we can look at, instead of trying to get a lot of profits, a longer, stronger price movement, instead, somebody says the Nasdaq, we're going to look at the Nasdaq now. Instead, we can look at smaller price movements. So we're not at risk of holding on for too long and the price starting to move in favor again, start moving against our favor. So of course, that's definitely something we can take into consideration as well. Now, the next thing we're going to look at, like I promised, is the Nasdaq. The Nasdaq, ladies and gentlemen, let's go to today's price movement. Here we go. Now, if we're looking at the Nasdaq, we're actually drawing a symmetrical triangle. So you can see here, we're looking at higher lows. But if we're looking at actually the price movement here, we're looking at a slight lower low. So we've got almost an ascending triangle, but it's more of a symmetrical triangle. It's up to you if you want to consider it an ascending triangle or symmetrical triangle. If we're going to look at an ascending triangle, because this is only slightly tilted downwards, then that's definitely considered a buy signal, but with a lot of downward volatility in the short term as well. If we're looking at a symmetrical triangle, it's more neutral. What can we look at in terms of this indication? What we can look at is if it crosses outside of this triangle. For example, if it crosses below here, we can look at that as a signal and speculate based on that breakout. If it's going to cross above here, again, we can do the same. Of course, in the opposite direction. Now, if we're looking at our moving averages, we're very, very high above our moving averages, to be honest with you. Both the 75 and the 100 as well. The only thing which is slightly worrying is if we're looking at our RSI here, the RSI is seeing divergence, okay? That is something which is worrying. We're seeing divergence here almost on the RSI. So again, that's something we need to be cautious about. In regards to the PMI, ladies and gentlemen, the PMI can be considered negative. Some people may say, I'm not going to consider it negative just yet because it's not guaranteed we're going to see the market decline. We're about to see earnings season in a couple of weeks. And maybe the PMI data just means that the Federal Reserve is definitely going to cut again in November, 100%. So some people may say, I'm not going to deem it just yet as something negative. If it was much lower than expected, I would say yes, potentially that's something negative. But some people may say it's not yet necessarily something very negative. So we've got a slight bias towards upward price movement, but we need to see more volatility before taking advantage of that. Now, because we're on a higher low, some people may want to draw Fibonacci levels, in which case we're very, very close. If we cross above, gain some volatility upwards, we cross above 65. What people may want to do there, because we're about to cross above 65, is switch over to a smaller time frame and say to themselves, if it's going to cross above here onto a new high, that's where I'll take into consideration my buy. This is for people that want to take advantage of that upward price movement. But ladies and gentlemen, the key thing in regards to the stock market is going to be earnings season. Yes, we will have next week. We will, also this week there's a lot of data. We've got consumer confidence, for example, tomorrow. But next week we will have the NFP data. But a lot of people very soon will start to look at earnings season, which will start off with the banking sector and then move towards growth stocks such as Apple, Nvidia, Tesla, and so on and so forth. Now, people that want to take advantage quicker of higher volatility um, from earnings season, they may be better off looking at the Dow Jones, because the Dow Jones will see more volatility quicker. If you're looking at the Dow Jones as well, let's go to today. We can see that's more of a retracement, ladies and gentlemen. So here we've got downward price movement, but we're starting really to gain upward price movement again. What could we do here? Again, we can, if we wish, draw our Fibonacci levels like so. So we can draw Fibonacci level to the current price here. If it declines again below 65, we may speculate a decline. The 65 is at this blue line here. Alternatively, what can we do? We can look at a breakout of this level here. If it breaks above that, we can speculate upward price movement. The only thing I would say in regards to that, and both the Nasdaq and the Dow Jones, there's a few things to look at. Number one, we definitely want to look at bond yields. If bond yields are lower today, they're definitely not lower. If bond yields are lower, it's considered positive. Here they're very high, so that's considered a risk to the stock market. Doesn't necessarily mean they're going to decline very, very quickly, or we're going to see a crash, but that's a risk there. The other thing for us to look at is the VIX. We can look at the VIX index. So, for example, if I go here and I go to futures, go to performance, let's look at the VIX. The VIX at the moment is minus 86, minus 86, 0.86. If it's minus, it's positive for the stock market. So we've got one negative sign and also a positive sign as well. Ideally, we want to trade where those are in line. Both indicate positive, both indicate negative. So if I actually look at the components, for example, it's probably going to be a mixed bag. So in regards to the components, I won't say it's mixed. I'll say the negative thing is that the two most important stocks are declining, which isn't a great thing. The two most important stocks are declining, so that's definitely not good. But if we're looking at, ladies and gentlemen, the vast majority of what we can see here, so if we go back to all the way 29, or if we look at the top 29 stocks, for example, which is as far back as we can see here, out of 29, only one, two, three, four, five, six. Out of 29, only six stocks are declining. The rest are increasing in value, especially if we look at Tesla, for example. That's performing amazing again. So if we're going to trade the stock market, guys, these are three things to look at. The components of the Nasdaq or the S&P 500 or the Dow Jones, whichever you're trading. To look at the VIX. So we can see here the VIX down here, which is minus 0.86. And also bond yields, which is here. These are three things definitely to take a look at as well. So, ladies and gentlemen, that brings us to the end of today's session. Hopefully, you found it educational. Hopefully, it was informative. If anybody has any questions, feel free to ask now. Some people I can see are asking questions. Somebody says here we focus on stocks with a weight of more than 1%. It's a question. There's different theories, to be honest with you. Some people will look at the whole of the Nasdaq. That's not a bad thing. But there is theories that say it's more advantageous to look at all stocks which have 1% and above. Sometimes that means the top 23 stocks. Sometimes it's the top 24. Sometimes it's the top 25. That's one theory. Another theory is to look at the top 10 most important companies. That's also another theory. So this is something, of course, you can take into consideration. Yes. Someone here is asking about copy trading. Yes, of course, here at HF Markets, we offer copy trading. We don't charge people for copy trading. You have a massive list of strategy providers. So you can copy somebody, even if you've got a small account of 50 US dollars or 25 US dollars, you could copy somebody that has hundreds and hundreds of thousands of US dollars in their account. It's not an issue. You can take advantage of them. You can take advantage of more experienced traders if they are. And of course, if you are trading somebody with a larger account, our system basically allows you to say, yes, he's opening very large trades, but I want this trade size to be open on my account. So it's in no way, shape, or form something negative for you. So that's something you can, of course, take into consideration. And we have hundreds and hundreds of strategy providers. Like I said, we don't charge. Some strategy providers will charge you, but we only allow them to charge you if you're profiting. If you're not profiting, you're not charged. So, for example, if they've traded this week and they've earned you 100 US dollars, they may say, we're going to have 20% of that. But they cannot charge you if they're not earning you any profits. So there's no conflicts of interest there. So, ladies and gentlemen, I can see I've answered most people's questions. I can see I've got another question here. Somebody says if the poor data continues, will the price of gold continue to increase to 2,700? Yes, of course, technically speaking, if we're following theories, if we are going to see negative price movement, especially if we're going to see lower interest rates, not necessarily to see a recession, that may not be good for gold. But if we see lower interest rates, a weaker US dollar, then that can be deemed as something which is negative for gold as well. Also, potentially, if we see further escalation in the Middle East, that could be something which is going to be positive for gold. So, from what I can see from my list here, that's the last question I have. So, enjoy the rest of your evening. Of course, feel free to register on our website. It's 100% free. We have a lot of educational material which is available for you. Of course, with no cost at all. But in the meantime, enjoy the rest of your evening. Hopefully